Welcome traders to another global macro update. Like always, we're going to cover the current pandemic with the COVID-19 virus, kind of looking at the people who have got it, and then also the spread, and then also the people who have unfortunately passed away. And then we'll go on to the news topic or news topics of the day, which is kind of the overarching potential for how long this is going to last and what a lot of governments are doing to try to stop the spread of COVID-19. So we can see crazy, almost 500,000 people confirmed. This grew so rapidly. Italy almost exceeding China in the total confirmed cases, which is very scary. And then basically every country is increasing every single day. Canada at almost 3,000. US at currently 60,000. Now these numbers are going to be a little bit delayed, so expect them to be a little bit higher. And yeah, we hit the 20,000 mark for number of deaths. Like, holy shit, Italy's just fucking taking a beating, and I feel so bad for them. Like, they have it for sure the worst, and then Germany has it pretty bad, France has it pretty bad, Spain has it pretty bad, but yeah, Italy's definitely really having it the worst right now. So I wish everyone the best. I wish everyone safety. Really take this seriously. This isn't a joke. People are actually dying, and we'll talk about the difficulties of the governments and what they're having to deal with in the next couple segments here within the video, and then quickly just looking at the parabolic move of the global cases from the Center of System Science and Engineering at Johns Hopkins University. If you understand compound interest, you know how great it is if you're investing and you see the price appreciation, but this is compound interest working against us, but it's increasing at like 20-30% a day, it seems like. A day. It's scary as shit. So this number is going to just grow faster and faster and faster and faster. And this number as well. So really stay safe out there. Treat this seriously. This is not a joke. This is not something that will blow by super quickly. This is something that people are taking very seriously, and they should, because it's not a joke. It's a serious pandemic that's currently occurring. So this is just a quick look at some of the other countries that are really taking this seriously. We haven't talked a whole lot about any other countries other than the US and Canada, but this is South Africa. Their president, Mr. Ramaphosa, ordered South Africa to stay in their homes, and we'll discuss this right now. South Africa has announced a national-wide lockdown of its 56 million inhabitants for 21 days, enforced by police and the army in a bid to curtail the spread of the coronavirus. Yeah, so they're using police and army, and it's just a question of, do you think other countries will follow suit with this strong move by the government? I personally think that when it does get worse, we will see this sort of military action come into the United States. I don't think Canada is going to get as bad. Just personal opinion. I can't really give you specific details as to why, in terms of just having a bias that Canadians are a lot less aggressive and I guess short to come to the conclusion that the world is ending to some degree. But yeah, I do think that the army and the police will have to step in the United States, which would be pretty scary, and there'll be a bit of a divide there. So we can see South Africa isn't even that bad. Confirmed cases in the country currently set at 552. This was written yesterday, the highest in Africa, but much lower than other major economies across Europe and the Americas, with 0 deaths recorded so far. So they're already stepping into using police and an army to ensure that their rules and policies are being implemented. And they have no deaths, and they only have 552 cases. So Canada, US, Australia, many of the countries are way behind the curve. Now, obviously, these Western countries got hit first, it seems like, but at the end of the day, we see the right things being done by different policymakers by really taking this seriously. The restrictions run from midnight to Thursday, March 26th until midnight to Thursday, April 16th. A host of new international travel restrictions and quarantine measures will also be implemented. Ramaphosa noted that the number of confirmed cases has increased sixfold in South Africa in just 8 days. That's crazy. And warned that this number will continue to rise before another 150 cases were confirmed on Tuesday morning. And just this last quote here. While this measure will have a considerable impact on people's livelihoods, on the life of our society and our economy, the human cost of delaying this action would be far, far greater, Ramaphosa said. So I completely agree with him, and I do think that governments around the world who are taking swift and aggressive action are doing the right thing. My personal opinion. So this is now discussing kind of how long we're going to see this. I'm not a health or science expert. I don't really know too much about it, to be completely honest, and that's not where my skills and I guess my knowledge lies. But we'll take a quick breakdown here. I wouldn't be the person to ask about the more granular details of this, but we'll break this article down and just discuss what we're able to see for potential extension, how long we're going to see, and also just some stats with how different governments are handling this crisis. So we can see UK Prime Minister Boris Johnson said that he believes the country can turn the tide within 12 weeks. And President Donald Trump has suggested that the US can open up again fairly soon. However, health experts are much more cautious. That's because lifting restrictions to alleviate the economic and social damage of a prolonged period of lockdown could risk a second wave of coronavirus cases. That's definitely not something that we're looking for. Let's continue reading. We are in for a long haul, at least for another month or two. Eric Fiegelding, a global health economist at Health Chan School of Public Health, told CNBC's Capital Connection on Monday. Don't know if I said that name exactly right, but hopefully. He also said, "This is not disappearing in the next few weeks, no matter how we wish to compare to Wuhan," Fiegelding said, referring specifically to coronavirus cases in the US. So, again, we are in it for at least 2 months or more. And maybe the vaccine will arrive earlier than 12 months if we get really successful trials that get to terminate early so we can give it out to everyone sooner, he added. So, that's the kind of time frame we're looking for. A potential, 2 months at least, or a month at the minimum. And then for a potential vaccine, we're looking at a year if we get really successful trials. So, it's not going to be as quick as I think a lot of politicians are saying it's going to be. Obviously, they're trying to make it as soft as the landing as possible. They're not going to tell everyone to panic. They're not going to tell everyone that it's going to last 6 months or 4 months. Of course not. That would cause havoc and panic, and nothing good would come out of it other than telling the truth. And that's not what politicians are there to do. Let's continue reading. I cannot see all of a sudden next week or next 2 weeks from now that it's going to be over. I don't think there's a chance of that. Dr. Anthony Fauci, director of the National Institute of Allergy and Infectious Diseases, said in an interview on NBC's Today show last week. So, when will a vaccine be ready? We already kind of touched on it. It's likely such measures, most notably large-scale social distancing, will need to be in place for many months, perhaps until a vaccine becomes available, Ferguson said in a report published March 17th. In the same report, scientists at Imperial College London estimated it could take up to 18 months at least to find a vaccine for COVID-19. The health agency has encouraged people around the world to wash their hands regularly, avoid touching their eyes, nose, and mouth, maintain social distancing, practice respiratory hygiene, and seek medical care if they have a fever, cough, or any difficulty breathing. So now this is where we're getting to how different governments are reacting to this pandemic. You have some measures where they're going to try to lock everything down, try their very best to completely stop this disease, where other governments have tried different approaches. which is known as herd immunity. It's a controversial topic, and we'll get into it right now. So one other so-called exit strategy for the coronavirus pandemic could occur when enough people have developed an immunity to the outbreak through infection. This controversial concept is known as herd immunity. It is reportedly being used in Sweden and appeared to be put in place in Britain and Netherlands before both countries recently changed their approach after warnings that this method would most likely overwhelm their health systems and death tolls would surge. So basically, you have two options. One option would be what the United States are looking to do, what South Africa is doing, what China did, and what Italy's doing now is try to slow the spread of the infection by basically halting all economic activity. No one going to work, no one going to, movies, bars, restaurants, clubs, any sort of entertainment. Complete shutdown of the economy, right? But this would allow the healthcare system to absorb the massive influx of people getting sick from this disease, because there will be people who get sick because, like we said, the infection is so easily contagious, it's so easily to spread, that there will be an influx of people having difficulties breathing, having, effects of this virus, and could potentially die. So there's going to be an influx of people coming into the healthcare system. So places like Sweden and initially Netherlands and Britain, what they did is they said, there's going to be infections all over. We can't stop that. So what we're going to do is just have no real change and have a shit ton of people get infected kind of all at once, but then the economy's still running. We'll have a lot of people coming into the hospitals because we're not really going to try to stop it. We're just going to let it go through because we know that the death rate is, let's say, 2% or whatever, and even if we try our best to stop it, we're not really going to be able to stop it anyways, so we're just going to kind of let it do its thing. And this is the red. See where if you take immediate action, the capacity for healthcare system is still able to function. There's a lot of people coming in, but there's not a surge that it's unable to take care of everyone. Whereas we see in Italy, this is the second option, is we don't really change anything, but there's going to be a massive influx of people who have the disease. The healthcare system is going to get overloaded. There's not going to be enough beds. There's going to be massive deaths. Where do you put the bodies? That's what we're seeing in Italy right now. It's super sad, but this is how, for example, South Africa is taking it. Complete shutdown of the economy. Yes, it's going to hurt the economic potential and the productivity for the next, let's say, couple months, if not longer. It's very challenging economically, but you're not going to get that social impact that you would, like you would see with the second option. So we'll see how Sweden looks in the upcoming months, upcoming weeks here. If it does work, it could just be a massive economic meltdown, kind of for no reason. But if we see Sweden have major deaths, that would be a very bad move in terms of the choice on the Swedish government. But you don't know ahead of time. So that is the news topics for today. Hopefully that didn't drag on too long, and we still got your attention. Next thing we're going to be going over is the gold, silver, and the gold silver ratio, as well as a quick look at U.S. oil. Also, for anyone who is currently watching, definitely please subscribe if you found this useful. We don't really ask too much, but after looking at a couple YouTube videos on how to grow YouTube, it seems like that is the approach that many people are taking. So definitely, if you found this useful, if you found this valuable, if you found this information somewhat informational, definitely check it out more often. And the best way to do that would be to subscribe. So let's now talk about gold on the 4-hour chart here. Had a massive bullish move to the upside here, hitting our key level of resistance, previous levels of support, as we can see, around 1650. Now we're going to see it test as a key level of resistance, and this is a pretty vital area that we're currently testing. we needed to have a pullback. We didn't need it, but look how strong of a bullish push that was. We needed to have some sort of market breadth, and this is currently what we're seeing right now, is some level of a market breadth. The question is, are we going to hold this zone? Previous resistance, previous resistance, previous resistance, new level of support, new level of support. Because right now, we're in a consolidation right here. If we're able to hold this level of support, high probability that we're going to be hitting these highs here, right? And that would mean that we're no longer in a bearish potential momentum move. We're now in a consolidation, potentially even making a bearish push to the upside. Or sorry, a bullish push to the upside, my bad. So right now, if we hold below this zone, we still made a lower high. So we could see the price come back down. But if we see the price come up and test this resistance right here at 1680, well, then I'm looking at the price to continue the consolidation sideways. We can even see a higher low come in that would continue the bullish momentum to the upside, because that move was a very, very significant push, this move right here. So it's just a matter of, if we're going to create a lower high, then we could see potentially this support hold or this ascending zone come into play yet again to create some level of a confluence zone. That could be a nice entry right around the 1550 range. We've seen that zone as a key level of support in the past. So that could be an option if it does come back down here. And we'll take a dive into the smaller time frames to see what we can have within this price action pattern right here. And then if we break above the zone, we have our next level of resistance here, and we'll see how it reacts to this zone. If it's able to hold this zone right here, I think that could be a potential level where we would be wanting to look to see if there is a nice squeeze, where we could have a nice potential squeeze and then a push back down to the 1640s to kind of see something like this happen, like here, or like here, where we saw a test and then came back down, test came back down, we could see another test and come back down. But if we see a swift push above the zone, and we're going to come back all the way here, well, then we're going to be looking for a pullback to validate this previous resistance as a new level of support. And then we'll probably be looking for a squeeze somewhere like this, and then we might look for another long entry. But at this point in time, we're going to see if we're going to either hold this or make that the high there. So then we're going to be in the consolidation mode. So we'll see how that goes on the 4 hour, on the 1 hour. Let's see how the consolidation is looking. So what this looks like is a miniature version of this. If you can see this larger time frame right here. So in short, it looks bullish. This zone right here, we saw this trend line, you know, squeeze, 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 break, pull back, push to the upside. Very, very tight squeeze, very nice accumulation phase at the lows there. Let's look at the 15-minute chart here. Similar structure. We even have that ascending zone. So it's looking more bullish in my personal view. So we have that right there. A nice squeeze of the price action on the 15-minute chart. And I think it can be seen on the hourly as well. We got a nice little squeeze there. So that's an opportunity, in my opinion, that we could see of a nice entry here. Stop loss just below the recent low. And then we're probably going to be trying to attempt to hit the highs there. Little move, 4% if you're unleveraged. Risk of maybe 1.5. So then your risk reward is looking pretty favorable at 2.7, 2.6, something like that. Depends on where your take profit is, but that is the current trade that we're going to be looking for gold. I think that's a pretty good opportunity here. So we'll see if it breaks. Hopefully it will, to the upside, and then we'll be looking for that nice entry to the long side. So that's gold. Not really going to dive too much into the price action more because we don't want to complicate things. Want to keep it simple, easy to understand, and to the point. So just like that. But it's looking pretty good. You know, this looks like this. We're looking for a long breaking this squeeze and getting a nice little push to the upside again. So we'll keep our Performante Premium members updated on that. Silver is our next one. You know, looking at the weekly, this $14 zone, I've been calling this as a potential resistance, but with gold looking bullish, you know, I'm not going to short silver because gold does look bullish. But this could be a good hedge against gold because we are looking long here, and silver's at such a pivotal point for an opportunity for a short. Let's look at the daily. We see a nice wick to the upside coming back down, closing, really showing the significance of this descending zone. Very precise. We see candle closure, we see wick, and then now we're seeing we're seeing a body closure right there, or wick closure, wick, and then a body closure. So it's looking pretty favorable to see if we're going to have a hold there. And then what we would be looking for is a next leg down, because looking at the weekly, we saw a massive impulse push to the downside, and then we saw a pullback validating the previously broken support as a new level of resistance, and then we're going to push back down, I think at least to around $12.30 for a double bottom. If not lower, making a lower low, potentially making a reverse head and shoulders or some reversal pattern, but I think we will get another drop at least to that zone. So Bitcoin looks like it's going to drop, silver looks like it's going to drop, gold does not. If we do break the ascending zone of this squeeze and don't break the resistance, then obviously it looks a little bit more bearish, and then we could tumble back down to our 1550 range, which I wouldn't be too surprised about because it's a pretty important zone. Looking back at the 4 hour, we've tested, we can even zoom all the way back, such an important level. Our previous high, new support, potentially going to be our new support, but it was our previous resistance here. So very important zone, the 1550 range for gold. It's a vital zone. So if it comes back to that range, we're going to be looking for a squeeze. We're going to be looking for a nice descending triangle around there, holding a strong level of support before we get a nice squeeze out of that funnel. And then we get a nice bullish move up if we break to the downside here. But right now we're getting a squeeze above our $1,600 zone. So we'll see if we'll get a little bit of a squeeze to the upside here. So that's going to be silver, gold, kind of how we're going to play the the two different patterns there, because silver looks obviously much more like a bit of a short because of the larger time frames, and gold to me looks like more of a long. So we got opposing views on, you know, two assets that are in the same asset class. Silver is going to be more a speculative version. It's kind of like alts versus BTC. That's the way I view it. Gold and silver ratio, not a whole lot to talk about on the monthly. We're retracing back to our resistance. It'd be nice to see the close right at that zone, and then a rejection leaving just the wick, creating a potential opportunity where we're going to see that shift like we saw here, where the gold and silver ratio is going to drop significantly, where gold is going to be an awesome buy, because we see that gold is very undervalued compared to historic time frames, all the way dating back to like 1960s, 1950s. Like, it's never been this high. 112, it's been to 120. Like, I can't find a time where the gold and silver ratio has been this high. So silver is super undervalued at this point in time. Crude oil on the 4 hour, we do see a nice squeeze here. This is very similar to gold, silver, and the S&P squeeze that we'll get into a little bit later. And I do think that we're going to get a bit of a move here. Like I said, we're looking for not just the break of the descending zone, we're looking for break of the market structure as well to create more confluence for our trade. Where's the market structure? Where's the most recent resistance that we've been holding for the last little while? Well, let's think. I'll leave that because these are pretty important zones on the large term time frame, but they look a little bit messy on the 4 hour. But let's go back to where the most significant high is. It would be right here, right? If it breaks this market structure, 1, 2, 3, 4, 5, we've rejected this place 4 or 5 times on the 4 hour. So when we go to the 15-minute and 1 hour, it's going to be a pretty important zone right around here, right? Even looking at the 15-minute, look how significant that high is. If we're able to break that high, make a market structure higher high, and then validate this previous resistance as a nice new level of support, well, that's going to be a pretty bullish indication. That's going to make me want to go long. That's going to make me want to have some exposure to the upside, because US oil just got absolutely demolished to the downside. And looking at the weekly, where are we? We are at a pretty pivotal confluent zone of support that we could see some volatility to the upside with a strong bounce. Doesn't mean I'm bullish long term, but as a trader, we're looking for volatility, and we saw one of the biggest sell-offs we've seen in decades. The most recent one was in 2008. And we're seeing, look at 2008, look at the range we're in of volatility, right? Like from around here to the low, we're getting this 40% fucking move range here where we're just getting craziness of volatility. And right now, we made a low. And I think we're going to come back and test a major structural support, which is now going to act as our zone of consolidation that we always like to look for when a market structure is going from bearish consolidation to bullish. So we're going to be looking for that market structure. Let's look on the daily. Well, what could we see? That's a pretty nice area right here for potential market structure at $29. We could also see a potential market structure at $35 as a larger major macro market structure, really trading within this range like so. So that is a potential opportunity. That's our larger potential consolidation. And then we have our smaller consolidation right around here. And even within our smaller one, we're looking at 20% moves. For our larger one, we're looking at 40-50% moves. So that could be an opportunity here. So now diving into the smaller time frames, because we looked at the daily and the weekly, well, what's a good possibility here is we're getting a squeeze. We've already looked at gold and silver, looking at similar time frames. What I could see is a nice long opportunity if we pull back, validating the $25 range as a new support from the previous levels of resistance, put a stop loss, previous low, take profit, potentially up here. Easy peasy, 4.46 if it does what we're looking to do. No trade is easy, but in terms of the structure of the market, I think this is a pretty solid trade. I'm definitely going to be looking if it breaks this area of resistance. Very important. We don't want to prematurely enter. This is something that we want to see play out, and then we'll enter. If it does what we're looking to, if it does exactly what we're looking for, then we have an edge in the market. Look at gold. Look at silver. It did that. It did exactly that. We held a nice level of support. We squeezed into a nice funnel. Same with silver. Look at the previous global macro updates. That's exactly what we did. So we're going to be trading the same pattern. It's the same thing, right? So that's going to be what we're doing. Hopefully you guys are aware of the system and the strategy that we're using. If you got any questions, drop them in the comments. But I do feel like we are creating some awesome value here for you guys. Absolutely free on the channel. So yeah, I know that we're getting more followers, which is great, but yeah, let's try to pump those numbers here. We've been doing some fucking killer calls. All right, so let's continue on with our analysis for the S&P 500 and then the dollar index. Quick look at the dollar index. We did get a little bit of retracement here on the monthly. It looks like if we get some more retracement, we could see the candle closure at the resistance zone on the weekly. It does look like it's going to retest it. We did get an interaction at our major level of resistance. No surprise there. Obviously, it's very bullish. It's just a matter of looking at the fundamental catalysts that are currently occurring, and then looking at also the dollar index, because right now, what do we see? We see a massive amount of money printing, $2 trillion, and they're already talking about $6 trillion. They're throwing out these numbers like it's a joke, like it's not even big, but these are huge fucking numbers. Like, think of how much $1 trillion is, and they're doing multiple. Like, we were doing 700 billion at the when this whole pandemic started, and now we're talking 2 trillion like it's not a big deal. So these numbers are crazy, and we're talking about the unemployment claims not even coming in yet. They're going to be like, it's currently around 700 right now. It's currently 281,000 right now of the unemployment insurance claims. 281,000. The next update is estimated to be at 2.25 million. That's crazy. That's the highest in recorded history in the United States. So what is the Fed going to do? How have they reacting since? What have they been doing? Think about it. All they've been doing is just printing money. They've been doing QE. They're thinking about creating a US digital dollar and then sending people monthly or bi-weekly payments. If the United States citizens get that check bi-weekly every month or whatever it is, they're going to get addicted to it. They are 100%. If you get a check every single month from the government and you're still struggling to build your business, if you're still not able to make ends meet, hell no, you're not going to just say, yeah, that was a good time and I'll take it off. They're going to fight with everything that they have to continue that because they just have no other choice, right? And at a certain point in time, people are going to people are going to understand that with a massive increase in supply, what's going to happen? The value is going to devalue. The value is going to diminish. We've already seen it. Look at since 1915 or since 1971, since they took the dollar off the gold standard, off the Bretton Woods, I believe. Maybe don't quote me on that, but off the Bretton Woods, that was the reserve, so you can get a fraction of reserve gold, and then they completely took it off in 1971. They've been printing like mad. 2008 was a crazy, crazy time. So the printing is not going to stop. They told everyone they're going to do unlimited QE. So it's just a matter of how much faith humanity has in the US dollar. And this is a good gauge because this is the US dollar index. It's going to show the strength of the dollar. Also, we're looking at some of the Forex currency strength. We're not looking at this every single day, but we can see on this tab right here. This is weekly, monthly, and yearly. So on the weekly, wow, I'm surprised. AUD doing well on the weekly. Euro's doing well. USD's doing well. I might want to check some fundamentals there because I don't know if that's true. I know Euro USD is doing well. USD is definitely doing better. And this is currently strength heat map table. If you want to get this, definitely check it out. You can see what all it's taking into account, but you can see yearly, weekly, monthly, and on the weekly, we actually see USD kind of in the lower middle of the pack, which is a little bit surprising, but it does make sense because we are getting a pullback here. Remember that we talked about on the weekly. Let's look on the yearly. Yearly, Swiss franc, very, very strong. Japanese yen, pretty strong. US dollar, pretty strong. The weakest of the bunch are going to be AUD, Australian dollar, New Zealand dollar, and GBP, the British pound. Canada's kind of in the middle, Euro's in the middle. Monthly, looking a little less strong for the dollar, but AUD and New Zealand dollar are definitely pretty weak. Even though the weekly does show that AUD is pretty strong, I think it could just be like a little bit of a pullback or something. I don't exactly know, but AUD is looking strong on the weekly, but on the longer term macro chart, AUD in New Zealand is not looking too strong right now. So yeah, we'll see how this goes. I do think that there will be a correlation with the US dollar going down and the gold and silver ratio shifting to the downside. I think there will be a correlation there, and that's why we're looking at both instruments to see if there is a correlation, because usually when the US dollar index goes down, when there is a lack of confidence for the US dollar, there's going to be a surge in demand for gold and silver because those are going to be the safe haven assets, right? Right now, people are thinking the US dollar is a safe haven asset. If the US dollar goes down, what is there to look at? Gold, silver, cryptocurrencies, that's about it. So that's that macro outlook that we're going to look at. Some people think gold and silver is the only thing, but we're going to speculate that in the digital world that we live in, blockchain will have a major part of the future that we're going to be developing after this whole monetary policy meltdown is complete. All right, so we're going to go over kind of a long-term chart of the S&P. We talked about it within the Discord. Well, I talked about it within the Discord a little bit earlier today. Looking at the more macro chart of the S&P, this is the 1 month of the S&P 500. And we talked about some possible scenarios. So we got 3, 1, and 2, and 4. So we got, in my opinion, the highest probability to the lowest probability. We have, well, actually, I might switch 3 and 4 because I think this might be a 3, and then the 3 here is a 4. But anyway, let's go on with it. Let's actually take a picture of this so then we can talk about it. So let's actually say that this is the lowest probability, and this is actually a 3. So what are we talking about? In my view, the highest probability low for the S&P is going to be here. Why do I think so? So I'm talking 1550, right around here is going to be the potential low for the S&P 500. Not going to be instant, not going to be guaranteed, not going to be 100%, but it's going to be my speculation. We'll see how the price action reacts to around that zone. We're not going to instantly, but dollar cost averaging around these zones, I think is a pretty good area to be looking for a potential level of support. Now, why do we think that other than these two resistances here? Well, let's look back at the previous two major market sell-offs, 2001 and 2008, or 2000, dot-com crash and the 2008 financial and real estate crash right there. This one moved 50% down, right? This one, 2008, moved 55% down. From the high here to right here is around 55, maybe around 57%, but let's say around 55%. There might be wicks, there might be extensions, we don't exactly know, but you know, getting around the 5% mark is a pretty phenomenal accuracy. So the two moves that we had previously, 50%, 55%, so let's say we're looking at 50 to 60%, it's around right here, 1550. So we have the previous market structure dropping at 50%. So we have a previous historic move that's already taken place twice that had major sell-offs of around the 50 to 60% move to the downside. Market cap cut. And then looking at the next possibility, so that's going to be the highest probability situation for me. This is going to be number one possibility for me to start dollar cost averaging, and I will probably dollar cost average when the S&P is around that zone. My second probability, my second highest probability situation is going to be right here. 1150, 1150, around there. That's going to be my option number two. I do think it's going to be worse than most people think. The coronavirus is bad. The COVID-19 is bad. It's killing people. It's really a negative thing for humanity, obviously. But the economic factors that are currently in play and how the detrimental that's going to be, even when the COVID-19 spread stops and it's kind of completed with, is going to be very scary because we've never seen this before. It's a complete economic lockdown. Think I want to, like, simple economics is one man's spending and another person's earning. No one's spending, no one's earning. Everything is locked. There's no velocity of money. There's no exchange of currency. It's just everyone hunkered down. This is like a complete nightmare for a central bank, right? So they're going to do everything they can, which is AKA print money in different ways, different forms, different ways of purchasing assets and shapes or whatever it is. But basically, they're inflating the balance sheet. They're increasing the number on the balance sheet. So this is number two. I think it's going to get worse than most people think, and we're going to have a drop. And if we do drop below this, I think there's going to be a massive loss of confidence. I don't mind dollar cost averaging here. I really don't. But I'm not going to dollar cost average here. I'm personally not. So that's going to be my second option. Third option, I think that's around 65% from here to here. So that's another 15-ish % drop. That's going to be my second option. My third option, which is a little bit scary, is low, lower low, lower low, lower low. And this is an 85% drop from the high. Now you're thinking, this is impossible. It's never going to happen. But what happened at a 85, 86% drop? September 1929. What was that? The Great Depression. And people are talking about this potentially being Great Depression 2.0. So, you know, it's not out of the cards. I know it looks terrifying, obviously, seeing this market drop. But it's not out of the possibilities. You know what I mean? Like, You got to be prepared, and that's why I always tell people to try to understand how to manage risk. If you're a person who's going to invest for the next 60 years, yeah, you don't need any risk management because inevitably it'll probably go back up here. It's probably going to take 20 to 30 years, yeah, but it's probably going to get back up there. But the question is, do you want to be holding for that entire time when you are buying at these highs here? That's the question. Or are you be willing to take a small loss maybe, go here. If the market does rally and back up, you can always re-enter. That's the thing. I don't know. I'm a trader first and investor second, so I view the markets a little bit differently, but that just does not look good. I think we're going to have a massive drop here. It just looks like it's just more and more volatility, right? Because it's just expanding wider and wider. It's an opposing symmetrical triangle, and this is super bearish because there's just more and more volatility. Like, let's just erase this. So there's more and more aggression, both from the buyers and sellers. So we're getting aggression, 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 and at a certain point, it's just going to be too much for everyone, and there's going to be no more buyers because, yeah, we got buyers here, we got buyers here, we might get buyers, maybe not up there, but we're going to get buyers to some degree, to some pullback. It's just a matter of where, and then there's just, at a certain point, there's going to be a loss of confidence. People still think that we could hold. I think there's going to be a complete loss of confidence when we kind of go below this zone, another drop possibly to this zone, and then it's just a matter of if we're going to hold or not. So on the long-term time frame, yeah, I'm pretty bearish. Yeah, this is a possibility. 86% drop, that's a possibility. But, you know, I don't want to project anyone. I don't want to project my bias onto anyone's viewpoint, but I like to be open-minded as to where it could be. And this is the biggest debt crisis, debt bubble we've ever seen in history. And the United States is so ill-prepared for not only COVID, but also what's to come of the massive amount of deflation and then inflation that's going to come. So let's now go to the smaller time frames. That's a bit more of a macro view on what I think happened, what I think is going to happen. Now let's look at a smaller time frame. We talked about the pullback coming. This is that pullback. I'm not looking to counter trend trade, so this is a nice little pullback. And we see a nice descending resistance right here. Very, very well respected. Once we saw the price break our zone of confluence, which is right here, previous support, new level of resistance. So that's our market structure zone right around here, right? And then this is our descending zone. So once it breaks this point, well, then we're looking to long. If we were looking for longs because of the market structure price action checking off, we see more buy volume coming into the sell volume. See that right here as well. Overall, looking pretty damn good. We see a push to the upside right here, breaking our zone of confluence. We see a nice pullback right here, nice pullback, and then a push back up, testing our next zone of resistance. We see that resistance right here, here, here. And then we did tell the market or the Performante team, I think it was maybe a little bit higher, maybe a little bit lower. Right here, it said, you know, breaking this zone, this $2,500 zone, could be a potential for a shift in trend because there's going to be a lot of short sellers still within this market. I think that's going to be the zone that a lot of people are going to get out of the market. If it does push up, there's going to be stop losses, there's going to be short sellers getting out of the market, which means they have to buy, and the people that are looking to have more of a bullish bias are going to be entering here because this is a pivotal high that we're currently seeing within the market. Also in confluence with the 2,500 confluence zone of psychology, round numbers or zones of confluences if they are lining up with key parts of TA as well. So we said that if we break the 2,500 zone, we could see another leg up because of the things that we described, and we are seeing that right now. We do have a minor level at 27 and then 28, but the major level that we could be seeing is this zone, 2850-ish. We can see previous level of support, previous level of resistance, potential new level of resistance. And what we're looking for while this ascending push is coming together right here is we're looking for something that we saw right here, an ascending trend line connecting the higher lows. We see an anchor point right here. We see 1, 2, 3, and then that for me is 4 touches, making it a valid zone. What we see after, push, pullback breaking a support, previous resistance, previous support, new level of resistance in confluence with the ascending zone, creating a nice level of confluence for the sellers, and then we're looking to enter here before we get a massive sell-off. So something like that, if we continue like this, I think that's something that we could see. So I think we'll get one last strong push to the upside, taking out a lot of short sellers. I know there's a lot of short sellers, obviously, because of the bearish push. That means there is an opportunity for a short squeeze, shorts getting out of the market, trying to get too greedy, taking too much money out, or trying to get too much money out of the push, and then shorts are going to get squeezed. There's going to be a little bit of a push, but at the end of the day, the momentum is to the downside. The fundamentals are to the downside. The catalyst is to the downside. So we're going to look for that opportunity. So we'll keep everyone updated, and hopefully everyone is getting some value from these, because we do them every single day, and we are providing some great opportunities in our opinion in terms of trades in the global macro space. So they're actionable. They're not 15-minute scalps. They're swing trades that are lasting 2, 3, 5 days. So they're actionable trades that could be taken. So hopefully, you guys are getting some value for whoever's watching. And if you aren't, please comment. I do like the comments. We've been getting more engagement recently, which is great. There's been some consistent people who've been coming time and time again. And for those people, you know who you are. Thank you very much for the consistent support and engagement. We really appreciate it. And we'll continue making these videos because of you guys. So thank you very much. And until next time, happy trading, everyone.